Let me ask you about that assessment that demand for office space in the capital is holding up, even with uncertainty. Is that your experience?
Absolutely. What we're seeing is, I think in terms of occupational activity from big corporates making big plays, big decisions in London, it's as strong as ever. So the three-quarter point mark throughout the year. We're just about tracking last year, which was pretty much a record, and there's some big deals in the pipeline. So I think by the end of this year, this could easily actually be the strongest year for occupational take-up for the last 5 or 6 years.
And how does that sit alongside other trends that look less promising? For example, the level of capital flows coming into London to be invested in property.
Yeah. What we've seen, what we normally find is that London actually is the largest investor market. London attracts more capital into real estate each and every year. So for the last 10 years, 7 of those, London's been number 1. And those years that it hasn't been number 1, it's been number 2. But actually, at the three-quarter point through this year, we're number 7. So we've dropped back. But I think that's mostly around just Brexit uncertainty. So I think when we've got clarity, especially around a sensible deal and a sensible transition, I think there's a lot of money that's poised to come back into London. So we're not actually worried about the longer term effect of London.
Do you think that money will come back into London regardless of the outcome of the election on December the 12th? Do you think that money doesn't care who sits at number 10, or do you think that international investor money cares very much?
I think the international investor money is actually focused on a sensible Brexit outcome, which will deliver a sensible transition period, and then the strength of London. It's the most transparent market in the world. We've got longer leases. Actually, the income return from London is actually stronger now than against Paris and the big German cities. So I think as long as we get a sensible Brexit outcome, then I think London's looking pretty good.
What's your assessment of how much money, how much investment the UK has missed out on, or London, whichever, has missed out on as a result of Brexit uncertainty?
Well, this year, we think volumes are going to be down compared to last year by about 30%. Now, if it's a short-term blip, I don't think that's a big problem, but the advantage of capital coming into London is that can help finance, that can help fund new developments, that can create new exciting centres. So we don't want it to last long, but actually I don't think it will.
And at Jones Lang LaSalle UK, you of course have a relationship with a big client, WeWork, just as I'm sure you have relationships with them in other parts of the world. Have you had to rein in expectations for what they'll do in the UK, given the trouble they've had with their IPO recently? Yeah,
I think WeWork are going to they're going to consolidate a little bit, and their rate of expansion isn't going to be as quick. But the flex the flex sector generally, co-working, is absolutely here to stay. And across Europe, there are nearly 1,000 different flex operators out there. We've got some significant ones in the UK, the Office Group. We've got Fora and a number of others. So if WeWork's expansion slows a bit, then I think there are plenty of others who can take the slack.
So the sector will not slow then, you don't think? Because the sector has had incredibly fast growth.
Yeah, no, I think that sector's here to stay. I mean, a lot of our occupier clients really value having the opportunity to have 20 or 30% of their footprint in that more flexible co-working space.
And I know on the question of where technology meets the property industry, you've been investing around certain startups, so JLL, Spark. Do you worry perhaps around the valuations of some of those businesses that you've been investing in because of what's going on with WeWork and the difficulty in pricing an IPO there?
I think for us, we're actually not worried about it in terms of the investments that Spark are making. So they've got $100 million of JLL balance sheet money. They're into early stage and startup propcos, and the Spark team that are leading that initiative are really experienced and have had a lot of a lot of knowledge in that sector.
We're here at the CBI event today, and it doesn't usually happen. In fact, apparently it's never happened during a live election campaign, which adds a level of interest from all the political parties. So we're going to be hearing from 3 leaders today here at this event. What's your message to them around the property sector, around what it needs? I mean, you've talked about certainty around a sensible Brexit.
Yep.
What else do you want to see?
Well, we want to see increased commitment into infrastructure, and we want to see increased investment into digital infrastructure. I mean, the UK actually is behind a lot of our competitor countries.
Did you like the Labour plan to roll out free broadband to everybody?
Well, I think all of the parties are coming up with their own plans to solve the digital infrastructure conundrum. So we absolutely welcome that. I think also hopefully we'll see quite a lot of talk also about some of the broken windows, if you like, in terms of the UK. So the rates system at the moment, it's not moved on. It can't deal with the rise of tech companies and the internet. So we need to see that.
Chris,